You continue to swim upstream against a general lack of data. But we do have data from different sources. Of course, you try to make sense of the broader economy. The federal shutdown is not necessarily your friend. For the Everyday Economics column that runs every Monday at thecentersquare.com and it is shared across the Center Square Newswire service, you kind of dig into what's going on in the real estate business. And there was an interesting data point that came out. And of course, this is unaffected by any government data, right? And I'm just going to pull right from your column, right? You wrote last week's economic data painted a picture of an economy sending mixed signals with resilient housing activity colliding against stubborn inflation and an uncertain policy backdrop. As the Federal Reserve prepares for its widely anticipated interest rate decision this week, the data offers both reassurance and reasons for concern. You move right into the housing market as this pertains to housing. And I think that this is kind of interesting data. And this is something that's probably not discussed in the mainstream too much, and it doesn't get a whole lot of attention. But you wrote the housing market delivered an unexpectedly positive surprise. Existing home sales rose 1.5% in September to reach 4.06 million homes on a seasonally adjusted annual basis, according to the National Association of Realtors. More impressively, right, sales jumped 4.1% compared to the same period last year. So what's going on there? Has there been some temporary relief from the most recent Fed cut in rate or what?
No, actually, so remember the sales the sales for September reflect homes that went pending in August. They went on the contract in August,
right?
Or late July, early or mid August, and so
what's up underneath the optimism? I mean, it's
look, it's that 30-year mortgage rate drop of 15 to 20 basis points in late July, ahead of the in early August.
So one cut ahead of the cut that was just made.
That's right. Right. Markets are forward looking, and what you had is basically everybody started to see the labor market cooling, and so the long-term interest rates started moving lower ahead of the Fed's rate cut, right? And that has been beneficial, I think, for the housing market.
Well, something is happening there. I got a text message from a realtor in my market who would love for us to sell our house, and we've had a conversation with her ongoing. And I thought that the timing was somewhat odd. And then I got a message from her on Friday, and then another one from her on Saturday, trying to prompt a call, to get my ideas on what I'm doing and when. Because we're sitting here, it's almost November. I mean, we're in kind of toward the end of what we would consider, especially in a market like mine where the schools are the big driver. We're sort of outside the window. So, tell me more about what's going on that people might not be able to see right now.
That's right. The sellers kind of, activity tends to slow this time of year, right? So it's kind of the slow season, right? And so people don't tend to sell their homes in the fall and the winter. They go out and try to sell their homes, in the late winter. I want to say late winter. So February, March, you start to see activity really pick up. In the spring, right? And it's cool. That's what we call it, the spring home shopping season. And people do that because, of course, they want to be in the right school district for the following year. And so what are we seeing right now? We're seeing kind of sellers actually with the drop in mortgage rates that we got, by the way, there's a bigger drop in September. So potentially you could see kind of sales moving a little bit higher. So that bigger drop really led to a small increase in sales, but it's also new seller activity. Sellers came back, and usually when rates drop, both sellers and buyers return. The two, right? The measure of sellers and buyers positively correlated over time, And so you have kind of both the activity increasing because both buyers and sellers are returning to the housing market at a time where, usually it's usually very quiet, right? If you drive around your neighborhood right now, I mean, I saw it like just this morning driving my kids to school. You start to see these signs popping up again, for sale signs up.
Interesting.
Right?
Interesting.
In the fall, which is really, really interesting.
So, I mean, in your everyday economics column, you wrote this as well. At first glance, the numbers looked encouraging. You're talking about like, the consumer price index release from from the federal government that came out from the Bureau of Labor and Statistics. Headline CPI rose 0.3% for the month, and we're talking about September there. And at the same time, core CPI, which excludes the volatility of food and energy prices, that increased 0.2%, but both came in below what a lot of economists were forecasting.
I think everybody was expecting a bigger jump, right? And so prices increased, and they increased quite a bit. 0.3% on a monthly increase is pretty big, but below expectations, right? And then when you take a step back and zoom out a little bit, and you look at where prices are relative to a year ago, well, 3% higher for headline inflation, 3.6% higher for core inflation. And so that is troubling because first of all, that both of those measures imply the Fed's preferred inflation measure, PCE, at around 2.8, 2.9%, which is close to 3%, well above the Fed's target. And so
of 2%, just to be clear.
Of 2%, that's right. And so inflation has been moving in the wrong direction. You have a kind of stalled labor market, right? So people are not finding jobs very easily. Wages are not rising very easily, very, very much.
People aren't quitting jobs though right now either, are they?
People are not quitting jobs. Are they not quitting jobs because there's not that many opportunities out there? Right. And so you have a labor market that's almost frozen in place, kind of stuck. Well, when the labor market slows down that much and stalls, right? Well, the chance of going negative is very small, right? So it's very easy to dip into negative territory. In fact, half of the industries in the U.S. are actually losing workers as of the last jobs report we got before the government shutdown. So the labor market's very fragile, but inflation is moving up, which leaves the Fed in a weird situation, right? It's, how could we possibly prop up the labor market, but also avoid inflation, causing inflation to reheat? And so that is the dilemma that the Fed finds itself in right now.
Well, we're talking about the Fed. So the Fed decision on rate is coming on Wednesday of this week. As we said, we're taping this on Monday morning. What's the crystal ball say for you, Dr. O?
Well, no crystal ball here. Everyone expects the Fed to cut an extra 25 basis points on this Friday, this week. And so that's what the Fed said. And the prevailing theory here is that with a frozen labor market, no nominal wage increases, the increase in prices is lowering real wages and could actually cause consumer spending to drop further. And that's not good for the economy, right? And so that's the theory here. The prevailing theory here is that the pressure coming from tariffed goods, the pressure on prices could essentially hurt the labor market and the economy if the Fed does not step up to protect the labor market and prevent further damage, right? And that's interesting, but we'll just have to wait and see if that's what plays itself out, right, in data when we do get some data, because the last thing the Fed wants is to get this wrong, because if it gets it wrong, then inflation could come back roaring, and that would be disastrous.
Well, I appreciate your thoughts as always. Fed Chair Jerome Powell speaks Wednesday. We'll have, in all likelihood, a new Fed rate by Friday. Appreciate your thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics wherever you get your podcasts. Make sure you listen to Dr. O and me each week on the Center Square Radio Hour.